The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, the Friday edition of the Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, Friday. I'm here 11 o'clock till noon, 877-927-6648. We'll be able to take a lot of calls today. Hope you're going to be ready to call in because this is a really critical period. This is the time you really would like to get an analysis of whether whatever you're looking at has the potential to go up or to go down, what the parameters are, what levels we're looking at. So this is a great time to be calling in. And a fabulous 2 hours. Steve kicks it off. Steve Rhodes, 9 o'clock till 10, then 10 till 11. Tom wasn't there, but he did have Daryl Martin, and Daryl and Steve had a great show together. Two interesting things. Three actually. One is in the discussions, Steve often talks about collated. Now, I've looked it up and I think I understand, I remember, but Rolfs used to talk about it. Just, it's a magical word. Just, it sounds so intriguing. And when Steve explains what he's doing and how it all makes sense. And I had asked Steve, I IM'd him to say, exactly in the context, could you explain collated? But we were running out of time, so I'm hoping on Monday that he'll, because I'm pretty sure it's like overlapping, joining, tied together. So I think that's what it means, because in the context of what he was talking about, that's pretty much what it seemed to be. So, but I love Steve's explanations of things. I love the way Daryl's been working, just training us, going through these different techniques. His diagnostic hour. Well, this is the diagnostic hours coming up still later in the afternoon, but in the techniques that he uses, and so. And don't forget, Stephen mentioned this. I'm going to mention this again. So that was number one, the collated. Number two is I have a webinar coming up. The first one is level 2. I usually do it the other way around. I go level 1, 2 days, and then immediately we go to level 2, which is 1 day. But this is for folks who are really conversant with the ChapmanWave. They use it within their techniques. Remember, the ChapmanWave is an umbrella. I'm going to show a whole bunch of things in a few moments based on the ChapmanWave. You heard me yesterday talking about Costco, about that Rogue Wave. We'll talk about all that in a moment. But most importantly, I've always said that if there is a technique that is robust, then everything else that can be linked to that particular technique should be complementary. It should enhance, it should create an even greater security, because robust systems, just as fractals in any form, in any size, always remain the same. That is, a little pattern gets repeated, big or small. So chart patterns in human nature are always the same in the market. We go from aesthetic, we go from sparsity to overabundance, to excessivity, a period that we've been in for quite a while. Not everybody, but a lot of people. I just look around. I can't believe how many Jags I'm seeing. I can't believe how many Bentleys I'm seeing, convertible Bentleys, Ferraris, Maseratis. And there's another aspect I'm not going to talk about right now. But that, to me, says that if you have a robust system, then anything you learn should be additive. In other words, if you have something that you do very well, you should be able to sift out like a sieve. You throw in all the little grains and only the bigger parts remain. Everything else gets filtered and falls. That's the same with the technique. So level 2 is what's coming up Thursday, October the 25th. It'll be going from early in the morning. I'm not exactly sure, maybe 8:30. I usually even like to get there earlier, until after the market closes, maybe 4:30, 5 o'clock. And that's for anyone who's done level 1 or really has used the ChapmanWave methodology very, very intensely and understands it and wants to go to the next level, wants to learn about all the innovations that I've done over the years, and certainly over the last 3 to 6 months, a lot in the candlestick patterns, in the silent doji, in the round numbers, the silent round numbers, in the patterns, what patterns I'm inspecting for the next 2 to 3 months. That's really always important. Level 1 and level 2, when I spend a lot of time with participants going through the chart patterns that we can expect going forward. I try to do that with my subscribers every day, but this is a lot more intense because I can get the feedback. That'll be live here at the Babson Executive Conference Center in Wellesley, Mass. That's the way. It's all on the front page of TFNN. Add to that, I'm going to do a level 1, which will be December the 6th and 7th, Thursday and Friday, all day. It's a webinar. This one is a live webinar, just like I did in January, and also a great deal of fun. There I have to ask you if you get it or not, but actually I have ways of finding out, because I want to see the light bulb go off. I want to say, see, that person's got exactly what I'm talking about. You can't always see the light bulb when you're doing a webinar, but I have ways of doing it so that I know I can get a response that is going to say to you that by day 2, your questions, and remember, questions are really important. The same thing here when I expect someone to call in. The questions are important because your question is very often what someone quietly sitting at the back of the class is saying, I'm not sure. And then all of a sudden they say, yeah, that's the question. That's exactly what I want to find out. So that level 2, to go with it, there are a whole bunch of complementary things, but it's not even the complementary things. You can use a Tiger Dollars. You get a CD introducing the ChapmanWave methodology, which you have to go through beforehand. That's a prerequisite, and I'll show some of it in a moment. And you've also got to do one of my webinars on moving averages, which I think is very important. So the one missing link in the CD, I don't discuss moving averages per se. I do in the MACD and the stochastic. So that was the second thing. Because why am I mentioning it? Because Steve is going to be doing a workshop a week from today. And what is that workshop, a live webinar? It's about candlesticks. And if you know Steve at all, you know that he is extremely methodical. He garners knowledge, he puts the pieces together, and then he puts the pieces together in his own way. And putting it together in your own way means that way is a methodology that you can turn into a method to add to your own techniques. So when you think of it here at TFNN, what we really try to do, they're complementary systems, they're complementary ways of looking at things. I don't talk about the Fibonacci. I use the Fibonacci and stuff, but I don't really make a big deal of it because I've got the waveform. I'm going to show examples in a moment. But more importantly than that, that was the second thing. I wanted to link the educational aspect of TFNN, what we really try to do. We get emails, we get questions, we answer them. I want to know that the folks who are listening to me and who, if you've got your chart up, I'll discuss in detail some of the charts that I'd like you to put up, whether you're at home, wherever you are, and we can talk about them together, and I'll explain things that I'm looking at. I really want to go back to the black charts. I know that from my own viewing on my Droid, and I got that big one, I see the white charts and all that, but I would use the charts when I think it's great for a printout. But I really am going to try to stick to the black charts for at least as much as I can. But I just see it, just the letters, the peaks and troughs pop out. The most important aspects pop out at me. I like that. That to me is very important. So, you know, I know that everyone has a preference. I have to do what I think is absolutely best, that I can give you the very best of what I'm trying to teach and educate here. So I will switch. I will do what I can, but most importantly, I don't feel I'm switching very often or too often, because I'm going to do what I have to do. Now, here's the other thing. The third is that there are aspects that of the ChapmanWave that I've been discussing for the last week in great detail. One of them, well, first of all, let me just show you what I've got here so I can get rid of this quickly. The E-minis, these are the E-mini futures, the S&P 500 December contract, had a beautiful peak F top. And the peak F top is the sixth highest peak that you get from a buy signal. In this case, the low bar of the 2nd of October at 1432.25 was the low. And from there, it ran up to 1466. That is a huge move. And then what happened is it started to pull back. That confirmed the peak F top. What I like about the white charts is that I can show you that, well, you can't see it. It doesn't show pink, but this top rectangle here is pink, then it's white, and then it's gray. The gray area is the area it's just that, exactly. It's the gray area that says it's dark there. This is where things better happen, because otherwise you're going underneath it. The S&P looks to me like it wants to trade below the 1421.25 low of the 10th, which was only 2 days ago. So that's a dreaded H. What is the dreaded H pattern? The dreaded H pattern is when you come down sharply, and look at the beautiful left side, right side price time edge, and then you make what looks like the lowercase h. It looks just like the letter H as a small letter. There it is. See, come down, then you have the arch formation, and this says absolutely, there is nothing stopping it right now from trying at least to get to the 1421.25, and it's at 1424.75, unless something amazing happens, and it's really going to be a big turnaround. More importantly, look at this. The daily chart of the E-minis has an up channel that's running. I loved yesterday. Yesterday was 10, 11, 12. I love numbers. Today's 10, 12, 12, Friday. And what do we have? Very critical support. Look at this. Look at that red line. The green line is the containment area. The red line says you better not close underneath it, otherwise you're going into the gray area. The MACD is deflected lower. This is what I teach in the Master Trader series. This is what I teach on the CD introducing the ChapmanWave methodology. Critical information. And look at the stochastic. It reversed. It didn't even go to 80%. It went to like 68%, and then it pulled back. And the on-balance volume gave a terrific inverted V-shaped signal almost immediately after running to retest the double top failure at the former peak G. So these are all aspects that we'll be going through. Okay, enough of that. Now what I want you to do is this. Oh, all right. Well, this chart, I wasn't going to show this chart, but I'll do it now. This is a chart of TJX, black background. I've shown subscribers exactly what we were looking for. Now, I hate to talk about positions I have, and it's not because it's the position I have to show off, because there's a lot of hubris. Those trading gods are out there. They're waiting to smack you on the head if you start showing off. There's no way that you as a listener can get to know what I do in the ChapmanWave methodology unless I demonstrate what we're actively doing. For instance, right now we have 2 long positions. Both of them are up from our purchase price. Well, we also have 3 short positions, and all 3 short positions are up. 2 of them, one we just got yesterday, and one we got this morning. So we have 5 positions, and each one, right at this moment, I mean, by the end of the day, could completely reverse. But they are doing what we want. But now look at the techniques involved. In the black background chart, I want you to see, because it shows up nice and clear. You see that white diagonal line? Well, that's a support line, and it just today touched right there at 42.79. TJX company. It's a fantastic company. Look at the week as we go out. Look at the weekly chart and look at the monthly chart. But look at the signs that we are getting of failure. That's what we do in the ChapmanWave. I'll be right back with our first caller, Joey Boston, straight after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, we're back. Basil Chapman. The Dow is up 9 at 13,335. It was up much higher, about 70 points earlier on. Comp Index is down 2 at 3,047. S&P is down up 94 cents at 1433. Gold is down 5. I still don't see anything on the upside, much for the gold. Silver is down 29 cents. Platinum is down 7. Now, copper is starting to pull back, down 360 at 371. Crude oil's and we've got bonds up a half point. You know, it's very interesting. The bonds are now, TLT's at 124.24, and we're going to go to Joe in Boston. Hi, Joe. How are you?
Hi, Basil. I'm good. How are you?
Very well, thank you.
Good. Before I get to what I called in about, I just had I was hoping you could just clarify something for me.
Sure.
On the S&P 500 on the monthly.
Yes.
Do you have an F/B?
Yes.
Yes?
Yes.
Okay, so my question is this. If we close under the high from September this month, so that could confirm the peak, okay?
No, Joe, be careful. The terminology you have to use is very specific.
Right.
I don't care where we close.
Right.
If we do not make...
you've already got the peak. You've already got it.
No, I've got a leg F. I have to wait all of October to see that there's no new high. If it goes to 1474.52, that extends leg F.
Right, I understand. So let's say we close at 14. Let's say we close right where we are now this month.
Yep. Okay.
That confirms it.
That what it says is...
It confirms the peak. I know
it confirms the peak.
Right. So then my question is this. Okay, so you get the FB. What do you then look for on I know the monthly is a very slower moving, chart, more longer term. What are the first signals you would look for to say the weighting is more towards the F than the B? What are the other things you look at before, it actually gets much lower?
I look at the repetition of chart formations. Now, think of this as, there's a story to go with it. I won't tell the story. But think of this as you've got the trunk of a tree, and then you know how you get these like elms. They have this, when I was in Newport in the summertime, we're walking up past one of those huge mansions, went through it, and there was massive elm tree. In fact, I think it was called the Elms. And then there was a branch that kept going sideways, and you said to yourself, how on earth, what about nature that has such adhesive tension or strength to be able to hold up a branch that weighs, I don't know how many tons, that extends for 35, maybe 45 feet, parallel to the ground.
Right.
And at some point you say, that has to crack and break, right? But it can keep going for quite a while. Now, what I look at is that arm that is extending to the right. By one's visual perception, you would say, oh, that it's struggling to make much higher peaks, and it's going further out. Therefore, it looks very fragile. And I said, look at the internals. Look at what Mother Nature is doing to the core of the tree. If, in fact, the 9-period exponential moving at 1382 on the S&P holds all the way through through October, then I have to say, now I have to wait for November to get some confirmation. I had a call recently from John in Philadelphia, and he was talking about what I did in 2007, where I had all the signals. I said, we've got an October doji high. It's a peak F. In the Dow, I have to wait until November. Then I said, I'm going to wait in December. I said, I'll wait to see if it closes under the 9 EMA. And if it does that, I have a confirmed sell signal that could go quickly to a sell mode in the monthly chart of the Dow. And on the 31st, it was amazing. On the 31st of December, the Dow closed under the 9 EMA. Well, this is a little bit different. The principle is the same. But what I would do immediately is I would go from the only way to get a longer term, what we would call, what you would know exactly what I'm talking about, is a hat trick top, is that I have to have the weekly saying, that peak that you're looking at in the monthly chart actually has internal strength based on the weekly or internal weakness. On the weekly, I'm looking at the MACD and stochastic acting very poorly. But if I had to cover up, which I'm doing right now, anybody looking at the chart, just take your hand and cover up the price and half close your eyes. That's why I love the black background. And half close your eyes and you'll see that the MACD and the stochastic are so bad that I would have said, if you had said to me, where is the S&P right now? I would have said 1380 for sure. So the price is holding up. Then there's another technique that I call the dreaded H, the lowercase h. So the weekly would then move quickly to the daily, and the daily, that was the daily, I'm sorry, that was the daily. Oh, the week, I'm sorry, I jumped over to the daily. Let me talk about the weekly in a minute, because it's holding pretty well. Very good questions. We're going to come back with Joe in Boston straight after this. Basil Chapman, Tiger Technicians, now 877.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back here at TFNN. This is, what is the Dow? The Dow's now down 6 at 13,319. SP's down almost 3. And the Composite Index is down 6 at 30.43. And bonds are rising up 20. And we've got some great questions here. Joe in Boston's offered a context in which we can look at the markets, and I'm doing that with him, and he's come up with some really good points, and the points are based on the ChapmanWave, which is what Friday is all about, the technical aspect of the ChapmanWave. And what we're looking at here, I did switch to the white charts for a moment, and I'll explain why. There are times where I really would like folks to maybe, if you're interested, print out the chart, ask questions, send them to me, because white charts are much, of course, cheaper to print out than black chart, background charts. Not only that, you can see the technicals when you print them out very clearly. So let me just do this. I'm going to the white background because I've done a lot of work. I'm hoping to find time this weekend to do a bit of a paper on the S&P monthly for subscribers. And this is the questions that you brought up are fabulous. Let me explain why. If you're looking at my chart, folks, if you're looking at Tiger TV, this is tiger.mobi. Or if you're in the this is a beautiful looking chart. What it says is that there is a trading range, huge trading range, between the 600 to 700 area in the S&P from 1997 up to the 1550s and 1575 area, all the way through from the peaks of 2000. Remember, that was the March top, to the 2007 October top, to where we are now. I've got it in pink, and it doesn't show up in pink. It shows up in a kind of a gray. Not only that, there's a price time match, which takes us to, well, it depends where you take it. One of the ways that I've got it is to exactly in October, to this month, and so far we're in the range, but we have not. 1471.51 is the high, and we haven't yet got sorry, 1474.51. I should have put that as a 4. So 1474.51. Let me type that in so everybody can see exactly what I'm looking at. 1474. Of course, I've already forgotten what I said. 41, maybe it's 41 or 21. Anyway, whatever it is, it's the 1474 level. And we've got the potential in the Chapman wave. You can see from the charts here. Look at the peak F top back in July of 1998. Huge pullback, then went on to a D. Then you went to an E top in 2005 after the low of 768 in 2002. And you went on to a peak E, a second buy mode in the peak E. So that says that when you're getting to that particular level, and the difference that I've spoken about very often is that in all the other buy modes, you got at least two consecutive buy modes in the Chapman wave going to at least a D or an E or even an F. This is the first time we've gone D to an E to an F. Right. Now, here comes the really big issue. The monthly chart, I'm going to have to ignore, because so far F/B is what I've got. I cannot, and I do not, and I should not make any decision on whether it's going to be a peak F until the entire month finishes, because the bar time frame that you're looking at is the one that you've got to wait out for the conclusion. Right. And in fact, it's even better sometimes to wait for another bar, because that bar can still extend whatever leg it's in, up or down. So that says to me, go to your shorter time frame. Now, the shorter time frame is the weekly time frame. And the weekly time frame, I typed that in before we made that extra high. Let me just do that again. 1474.51, not 41. 1474.51. And that's a peak D, and it's like a double top, because that peak D at 1474.51, the week of the 14th of September, pulled back, and then it went to 1470.96. Now that says, okay, you've got a little mini double top. So far, the day is not concluded, and my 120-minute chart says, whoa, be careful, you are sitting right on the 200-period exponential moving average, and the MACD and stochastic are at a point where they should at least try for a rally attempt. So this is a very critical level from a peak D, and there was a coincident peak F top with the peak F top back on the 14th of September in both the 120-minute chart and the daily. So these are all things that I take into consideration. Yes. So
Basil, back to the monthly. Just let me just see if I can just focus on the monthly for 1 second. If let's say part A is we confirm the peak at the end of this month. Would part B in the sequence be, okay, if we close under the 1380 level, now we're under the 90 MA on the monthly, does that now give the weight of the evidence to F but not completely confirm it yet?
Not if the stochastic, you see, this is the thing that keeps me from going big time short on the S&P. In other words, a sell signal straight to sell mode. First of all, I've just got a sell signal to a sell mode in the daily.
I'm just trying to get the sequence right, that's all.
So here we are. Now let me explain what I would look at. Chart patterns repeat, and the pattern that would repeat would be one that says if the S&P at the end of this month not just closes underneath 1381, 1382, it needs to close in the I would even put it at the 1352 to under level. Why? Because now you're starting to get towards the major candle that I'm looking at of June of 2012 with the Roman candle wick. And if the S&P slides as much as 40 to 50 points in October, then I'm pretty sure you'll see the S&P the stochastic and the S&P monthly start to pull back towards 83%. Still pretty good, but I'm watching to see whether or not the fast moving of the MACD dips to negative. That's just actually on the monthly. That would only say possible sell signal, not a sell mode. But if that weekly, you see, if that weekly takes out the 1390 to 1388 support, then it's saying, hey, now I'm under the previous highs of the peak C1, C2 back at 1419 area. And that says, stochastic, I'm darn sure that it will go under. It'll be at about 75%. And the MACD will have a failing pattern because it'll be way lower than it was. And at that point, I'm going to say, I still have F/B. But we can start preparing. In fact, I'm looking at stocks right now that are saying we are having a terrible time holding gains. And if you don't mind, if I'm just, I know what that you're looking at the S&P, but if I can just go to this TJX, which has been one of the many stocks that has had spectacular monthly charts, you can see that it's made a peak E back in August at 46.67, and then just an inside bar in September. Now October, it's about to test for the first time the 41.47 level of the 9 EMA. So even there, it's saying, hint, hint, this could be a serious top, besides which it's a pre-split stock, and those are the ones that are most vulnerable. But the weekly is already saying, uh-oh, I'm headed for the candle 4102 to 4331 of June, the week of June the 29th. That's how I go step by step. It doesn't matter what the stock is. And if you're looking at the daily chart, it's now, right as we speak, it's breaking that important diagonal line. So let me relate it, because you've got a great question. Let me relate everything that we're looking at here. Wonderful monthly chart. Weekly chart is starting to give signals that say, you got to be careful on the S&P. And the daily chart made a dreaded H. This is a heads up to say, be careful. That's a pattern that can become very, very, a very strong down move. But if you're looking at the diagonal, the diagonal comes all the way down to 1387, and is moving down every day. So at this particular point, all I can say is that there are so many signs that the S&P is in a sell mode in the daily. The weekly will give me a sell signal, just a sell signal, not a sell mode or anything like that, but just a sell signal. If it closes, it can't just close under the 9 EMA. The stochastic has to go under 80%. I have to wait another whole week. So I know that you love to look at it step by step. I know that you've done a lot of work at looking at the possibilities of what would constitute a correction that then goes to an even higher high. And you've done a lot of work that says, what if we're topping out now? All I'm saying is, I go in time frames. My daily time frame says, watch out below. My weekly time frame says, hey, the technicals are still good. The price action for the first time is showing the kind of weakness, but it did that exactly the same thing, same chart pattern back in the week of the 4th of May, when it went from 1415 high to 1367 low underneath the 9-period exponential moving average. Patterns repeating here. That's what I'm looking at. And if you had to ask me what would give me a sell signal in the to sell mode in the weekly, I'd say if by next Friday the S&P closes, I'm just going to do this right now. There's the candle I'm looking at right there. If the S&P closes underneath 1394,
yeah, I think that's just a key level. Then that 1370 to 1390 area is like the confluence of multiple areas, and if that doesn't hold on at all, if it slices through that, then we're in big trouble.
Now, let's just do something else, because I want confirmation. If you go to my Dow Quartet, GE, well, GE is at 2243, and I have to admit, I got yelled at from one of my subscribers last night because I do so much work, and then every once in a while, I misprint a number. Even though I reread it, I'm looking at so many numbers, I make a mistake. And I did that this morning, and I'm praying it's not going to work out. But that the mistake that I made was such an obvious one that folks don't do what I said, but I have to go strictly by my newsletter. So we might be taken out of a particular position. So GE is right now 2242. That's not good because it's got this dreaded H pattern. This is a key stock because it's held up beautifully up until now. IBM which has just been a major market leader, is making leg D in the weekly, and here we are, double top in the monthly. The weekly is making a double top. No sign yet of anything other than it's got that magnet of the cup formation. Watching it closely. If IBM, which is at 206 now, closes under 202, I'd say be careful, but that's still so far good. Triple M, which has been a great stock, gone to leg D now in the monthly, and a leg D in the weekly, has in fact gone to an A, B, C, D, a D in the weekly. So you've got triple Ds at the top, but it's still holding pretty darn well up in the higher region. So, and the final one, the one that's really my pilot lights indicator for the Dow, is UTX, and it is acting, it's just not acting very well at all. It's at 75.97. So when I go stock by stock, I'm looking at, now those are stocks that are in the S&P, but they're not. It's S&P's 500 stocks. This is the Dow. So I think you've got a great question there. I'm pleased we could spend some time on it. But you know the parameters. Now, that's the downside. On the upside, because the VIX index has started to move. It's now at 1604, but it's still very low. So if the volatility, I'm going to make it real simple. The volatility index goes into the 19s, especially into the 20s in the next week or so, we will be going down deeper. Until then, I'm calling this a correction, but there are some serious problems with some big stocks. Hey, I hope that helps you. So
thanks,
you want to
that was awesome. Thanks.
Great. Thank you very much. So that was Joe in Boston. Now we've got Kevin in Sacramento. Hi, Kevin. How are you?
Good, Basil. How are you doing?
Very well, thank you.
Hey, Basil, I was looking at Netflix. I don't have a position. It's acting weak, especially the last 4 days. It can't hold its gains, and it just looks weak. I was just calling to see what you thought.
You know, it did a very unusual thing. It had a spike up, which I have to call, let me just double check. The low was 53.13, and then the low was 53.05. That 53.05 says, yeah, maybe I can excuse it, but I've got the pattern that says this is probably a single leg up, a leg A up to the 74.23. Folks, we're looking at NFLX, Netflix, and Netflix right now is down $1.65. You don't have a position. I'm going to make a recommendation. I don't think you're going to miss out anything. That Eiffel Tower move, that's straight up and straight down to a peak E at 304.79 in the monthly chart with that beautiful candle at the top, says that the 50.91 200-period exponential moving average is like a magnet, and that wherever it goes to the upside, it's going to have to do a lot of testing. So as quick trades, maybe you can get something. I'm not sure what the news was to spiral it up this high. I don't like it. I think it's going to retest the 61.39 area, about a point lower. If it breaks that, then you've got to be careful. Then it's got, even the daily then repeats the same pattern in a fractal, and it's got that Eiffel Tower look, which it's done so many times. It even did that to the July high of peak D at 86.65. So I'm going to say leave it, don't touch it. If you want to short it, you can short it right here at 64.32 with a 1.5 point stop. Let's see, over today's high. No, not even a 1.5 point, a 1 point stop. And the moment if it does go to the 63.06 area, I would lower that buy stop to break even. I don't think it's acting very well at all. Hope that helps you.
Hey, Basil, if you have time, can you look at VMware later?
I'll try my best. I've got a chunk that I want to do, but I'll put it on my list and I'll have it ready. As we come in, I'll talk about VMware, and then I want to talk about Costco and some other charts. I'll be right back.
Thanks, Basil.
Thank you for calling. I appreciate that.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at TFNN.com and sign up today, because candlesticks will make you a better trader.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and to Kevin's question about VMware, VMW's symbol is down $1.97 and 87.02. It looks to me like it's got the left side, right side price time match in the ChapmanWave, as well as the ChapmanWave inside wedge target of 79.46, and that could come about somewhere around the 22nd of October if it closes here and it takes out 85.74 in the next 2 to 3 days. That would be my target. Could still have a little bounce here, but the trend is down both in the daily, the weekly, and the monthly, and the weekly has a dreaded H pattern. Now, let's talk about a couple of things. Yesterday, I spent a lot of time talking about Costco. I discussed the technique that I call the ChapmanWave Rogue Wave, and that's exactly what happened. It spiked up the day before to 104.43, but the technicals were failing, and it said that we can expect a sharp pullback today. Well, look at this. The high was 104.43. Today's low is 96.18. That is 8 points. Yep, 8 points down. And with very poor technicals, and the daily's in a leg D and the monthly's in a leg E, and we're going to watch this really closely. So that's one technique. Then in the 120-minute chart, I showed subscribers, there's the right arm extension. What is that? That's a technique that I discussed in my CD introducing the ChapmanWave methodology. This is what we'll be going through in my webinars, in my live, in the webinars, in both the webinar and the Master Trader series. Go to the front page, check it out. These techniques repeat over and over and over again. I'm going to show you something else in a moment. So the right arm extension is that where the price goes higher, but there's no confirmation in the technicals, and then it fails. That's exactly what happened. Plus, it had the cup formation, that drop bucket, etc. So remember, those are the techniques. Now, listen to this. This is fascinating. This morning, Steve was talking. That's why I recommend check out Steve's candlestick webinar coming up a week from today. Look, he spoke about FCX. If you review his 9 o'clock show where he shows the chart, he shows the line chart. Well, the line chart made a peak D and then it collapsed. Then he showed you the bar chart. Well, the bar chart went to a peak D and then it went to a right arm extension to a peak E. Then he talks about the candle where there's the island reversal. But look how you can put it together. Steve's showing you the extension of the Fibonacci. He's talking about the candles. I'm also talking about candles. He's got a different way of doing it, which is fabulous. And together, you put it together with the ChapmanWave methodology of the peaks and where you can get. So this is a peak, and if you were out, that's fine. Even though it went higher higher without the confirmation. And that is where you put the upside down V-shape, the little carrot at the top. When you've got the sell signal, because it went under the MACD, everything confirmed it, but then there's a little bit of residual strength, and well, there's a lot of residual strength, but it gives you the signal. So I wanted to go through that quickly. The other thing is, remember, we had a call from Marie in Erie, and I spoke about the, let me go to the white chart. I spoke about the UNG. She was in it. I said, hold it. I believe it should still go to leg D. Look at this. And then I also said, at leg D is where you're going to see the strength of the 200-period moving average. If it can hold above there for 3 or more sessions, it's turned the 200-period moving average. This is natural gas, United States Natural Gas Fund. It turns it into a support with 2184. So even if it dips down, now I'm going to go to the natural gas. Remember what I said about this incredible chart? Natural gas is forming a huge bowl formation that says when it breaks out, natural gas could make a very, very big move. Hey, how about that? Please check out my opening call. Check out the new postings of my Master Trader Series Level 2 for those who've done number 1 before, and a Level 1 beginners complete intensive course coming up Thursday, Friday, December the 6th and 7th. Thanks for being here, and I will be back on Monday. Stay tuned for Nico Dahan and all the fabulous shows.